Why are you paying for healthcare costs out of your own pocket when you could have your corporation fund these expenses? Well, by the end of this video, I'll give you all the necessary information that you will need to know about a healthcare spending account and why it's so important to you and your family. It's essentially taking personal costs and turning them into corporate tax deductions. My name is John Moakler, and I'm the founder of Moakler Wealth Management. And for the best advice on how to protect you and your family, subscribe to my YouTube channel and hit the bell notification so you'll be notified when we launch a new video. A professional who has a corporation is just like any other business owner who has to pay for drug, dental, and extended healthcare costs, both here in Canada as well as when you're on vacation or traveling for business. If you do not have access to a group plan through your spouse, then you'll have to pay for these healthcare costs out of your own pocket. And that's why setting up a healthcare spending account would be of huge benefit to you. So, by setting up a healthcare spending account, you no longer have to pay for all of these expenses personally. It's a 100% tax deduction to your corporation, and it's 100% tax free to you and your beneficiaries. Healthcare spending accounts are much more cost effective than a group plan because when you set up a group plan, you have to pay for your experience. So, if you're renewing it and you actually used it, they usually increase your rates as well as the insurance profits and taxes. And so it's kind of like they don't really want you to use the group plan because the more you use it, the higher the renewal cost will be. So, what is an HSA? It's a self insured private health services plan set up by you, the owner of the corporation, for the benefit of your family and the employees in the corporation. So, how does a healthcare spending account work? Well, think of it like a piggy bank where you're going to be using it for all of your extended health and dental costs, and it's set up in such a way that you will administer it as the owner of the corporation for the benefit of yourself and the employees and your family members. So, how it would work is that you would put in the money, and then your employees or your family members would go out and purchase a dental service, for example. Then they would submit the expense by going up to my website at moaklerwealthmanagement.com, and then it's actually reviewed and validated, and then within 2 to 3 business days the money will end up in their bank account on file. Now, you don't need to submit any of the paperwork, but you do need to keep the receipts in case you get audited by Revenue Canada. Leave a comment in the section below and let me know if you would like us to email you some additional information on setting up an HSA for you and your family. An HSA can be set up for a one person corporation or a multi employee corporation. And how it's funded is that you get a choice of putting a lump sum or a monthly contribution or a combination of both. And in some examples where you're not sure if you're going to be spending 10,000 or 15,000, I recommend to my clients to at least put in a lump sum and turn on a monthly contribution because under the guidelines, you're allowed to turn off that monthly contribution. But once you turn it off, you can't turn it on again until your anniversary date or if there is a life event. Now, who is covered under an HSA? Well, the definitions for the coverage are much more liberal than a group plan. And so it covers anybody related by blood or marriage or law. So, what that means is that you can have your children on there, you can have your parents on there. And we are finding that a lot of kids are returning home after post secondary. And in the case of the sandwich generation, not only are you taking care of your kids, but you're also taking care of your parents. And so you can pay for healthcare costs through the HSA for your parents if they are dependent upon you. One of the key things, though, is that if you don't spend all of the money in the HSA plan, it continues to roll over into any subsequent year until you actually use all of the benefits. Here's an example of one client where her father was traveling in another country on the other side of the world and he became ill and he had to visit a doctor. So he had to pay for the doctor's visit. He also had to pay for a prescription. And upon his return to Canada, he submitted the bill to his daughter, who had the HSA plan, and he got fully reimbursed for both the doctor visit and the prescription that he had to take. Another example is where I have some doctors who are looking to freeze their eggs because they're not ready to have children yet. So they go through that process, and the healthcare spending account will help pay for some of the costs of doing those procedures as well. Be careful about what's out there because the CRA is clamping down on what they see as HSAs that are cost plus plans. So they should. So picture this, you have a $10,000 medical expense and you submit the bill to your corporation and you get fully reimbursed. Well, that would be considered a taxable shareholder benefit. And if you're not putting that onto your income taxes and paying it as a taxable benefit, the CRA is starting to clamp down on these. As I said, with our plans, because of the way they're designed, and because you have to have forethought of how much coverage you want, ours are 100% tax deductible to the corporation and 100% tax free to you and the beneficiaries of the plan. Also, if you'd like to learn more about a healthcare spending account and whether or not it's a fit for you and your family, click on one of the links below to attend my masterclass, or there's another link that you can click to apply to become my client. Also, if you like this video, give it a thumbs up, subscribe to my YouTube channel, and share it with a friend. And always remember, when we design financial plans for our clients, we always make sure that their money outlives them in retirement.